Hey everybody, Dan Rawitz here. Happy Saturday. It's Saturday about 8:30 p.m. and we will call this video number 9. I'm now in San Ramon, left Red Bluff. It was hot. It's still pretty hot here. Anyway, I've been doing some research for next week, and I just want to show you what a really good candidate looks like, because I think this will really help you understand the types of trades that we'll be making when we can. It's going to depend a lot on your account size. Again, if you have a very small account, we'll have to do something a little bit more exotic, which will limit the margin account. The downside to this trade is if you don't have a very big account, it's a very high price stock, so it's going to take a fair amount of margin. But you just hate to use the word sure thing, but I think when you see this, you'll see what I'm saying. So let's start with a chart. First of all, you can see up here at $417. If you follow this line down here, straight down, what you will see here is that little 86.4 number that was right. There we go here, right about there. Okay, that's where the stochastic was when the stock peaked. Anytime you get over 70, you're getting pretty overbought, sorry. When you hit 86, that's a done stock, and the numbers didn't lie. And what you can see here is even before the stochastic peaked, our first indicator was that we broke the trend line. And you guys have followed me on these charts for a long time. We broke the trend line right here, and then we fell, and we found great support at 350. I made good money on this trade last week. I knew she was toppy. But I liked this floor, and I went $10 below this floor to have even more security. We made good money. It stopped my heart a couple times because I got a little too close. I kicked myself for not paying better attention to the indicators. But again, we had enough margin that we made money. So now what's happening is if you look here where it's trading now, if you see that red over here, right there, that's the stochastic line is at 22. That is extremely oversold. The other thing is the relative strength indicator, which is RSI. If you see all the way to the right, there's a 78.35. It was right there, right above here. It'll go back there now. Where'd you go? About there. It was about 78 at the top. So again, RSI showing an overbought stock. And as the stock has fallen, the RSI has come down all the way to 37. So you have all indicators that this stock is probably done falling. You have great support here, and you broke the downward trend line right here. Could it fall more? Of course it could. The next level is 325, which to me is a really, really good trade. And what I would do here is I would sell a put, which again, I'm going to sell a promise that if somebody wants to make me buy these shares at $325, I will. Or I would have to. I won't because I'll have a stop loss in here. But that's what I'm doing. I'm selling a contract. I'm going to get paid right now for doing that. And as long as the stock stays above 325, I make money. The next level down is really, really safe, and that's the $300 level. So I wanted to show you what the probability is of these stocks staying where they're at, because it's a very interesting phenomena. Oh, and by the way, the first trade that I talked about, the 325 trade, I will take that trade. Let me add that. I don't need to add that. Okay, we're just going to do a put, and we're going to sell it. We'll do 10, expiring August 3rd. And by the way, I might do a staggered trade. I might do like 3 here, 3 that expire on the 10th, and 3 that expire on the 17th or 18th. And I'm going to go down to a 325 strike price, because remember, strike price is the price that I'm promising to buy it. I'm going to do a put, and you can see that that's currently paying right. But it'll go between this 23 and 30. So what is that? Probably about 26 cents. So 10 shares. I think we can up that. I'd put in an order for that. That's $260 if I did 10 contracts. You want to see the probability? So right here, max profit, probability for maximum profit, 96.7%. That's pretty good, right? And that's take in a trade that lasts for 5 days. Just for 5 days, I need it to stay $30 above where it currently is. Now, keep in mind, this is interesting. This fall from here to here was 18%. It's already fallen 18%. It would have to fall another, I think this was 12% down here before that happened, and then even lower here. So as I go further out, the risk gets greater because the longer time on that option, the longer time that something could go crazy. And so what happens is the probability of this trade will get worse if I go further out. So I would only do the 325 for a short contract, and then I would go out the next week to August 10th, one more week, a week from Friday. And if I keep that at 325 strike price, now I get paid about 90 cents. So it's way more profitable to go out one more week. It makes a lot of sense, right? So we'll push this up to 90 cents. It's about where it'll probably trade on Monday. We'll go 85 cents. And then you'll see the probability won't be as good on this trade, but it's still going to be great. Now it's a 91% probability. It's the same strike price, but we took one more week of risk. I like 90% odds, I do. But what I might do instead on that trade is take that one down to 300. And that's when we get into the no-brainer category once again. Except, actually, I'm gonna correct myself. I get paid the same amount of money, but now I've got to wait that extra week. So if I'm going to go down to 300, yeah, it's a less risky trade for sure. But what I might do is go one more week. Let's go out to, let's see there. Is that the 18th? Yeah, I can go out to the 18th of August, so that's just a couple of weeks. And there I can get paid 35 cents. That's a $300 strike price. Let's see what the probability is there. And now we're back to a 97% trade. So I will probably buy 5 at the 325 for a really quick hit, and then I'll probably buy maybe 10 for the further out. And what happens here is if, heaven forbid, I lose on the first 5, fine. The next 10 or the next 5, I'm not losing that. The stock's not going to go below 300. Knock on wood, by the way. These are not guarantees. These are just my opinions. But you can see it. I mean, it hasn't been down here since May of... Was that May of this year? Yeah, I was down there in May. So it's been 3 or 4 months, and it's been on a steady climb. So we have these indicators. We broke the trend line down. The RSI is oversold. The stochastics oversold. By the way, we didn't even talk about volume, but the volume just kept falling as it went down, which is part of the driver of this RSI indicator. And then we have great support, even after a meltdown day where they shocked the street with their earnings were great. That's the funny part. But again, they reported less subscribers. It cratered. It got below support for a minute, made my heart skip a beat, and then closed above support. Bounced up pretty nicely. Now it's tested support 5 or 6 different times. So my guess is this stock stays range bound somewhere between 355 and 385. So when we take a more exotic trade, we're going to kind of capture this range here for you guys, and that trade will take very little margin and not have much risk at all. But again, I think this is about as low risk as we can get. This is a 96% probability. So I hope that helps. Again, a lot of this is just to help you further understand what happens when we sell puts into the future. I know you guys will ask. So this is a big number. If you do the 300 strike price and you did 10 contracts, that's essentially 1,000 shares that you're controlling at $300 each, which is $300,000. Wall Street wants you to have 20% of that. So that's $60,000 margin account for that one trade. If you have a lot of money in your savings account and you want to do some of these low risk trades with really low stop losses, they'll pay better than your bank interest. But if you're getting into this, I don't want to take a lot of risk, then I'm certainly not telling you to move money. But for me, we just took a chunk of cash out of savings, and it's how I make my living. So we'll draw money when I need it. But I keep it there, not all of it, but we have a chunk of it, just so I can make these kinds of trades. But later today, next video, we'll show you what a trade looks like capturing this sequence right here. All right, that's it. Hope this helps. Let me know if you have any questions. Take care. Bye.